the New Zealand dollar's been running on the Renko, because for those of you who have a keen interest on trading the currencies and looking at the Renko charts, I'm going to take you through this, and I'll also just upload that Beans workspace again, and we'll run through that as well. So the two new workspaces that I'm going to send out, or three, they'll be, or upload to the dashboard. There'll be the Beans workspace, soybeans, the yen futures, and the New Zealand US dollar is one to keep an eye on as far as good swings in price, and definitely some good movement. So let me just open up this other. So here's our New Zealand dollar. Now I don't think it's marked up the way I wanted to have it. Okay, so what you've got here, and I'll just insert the MACD as well. Now remember that the MACD, the trend trader's already coded up on this thing, but things that we're going to be slightly modifying on our Renko charts will be building in the MACD as part of the new system. So that MACD trend, so that'll automatically be taken, and you can see here this is a fantastic MACD setup. You've got that bearish divergence there. Price makes higher highs, and you've got your MACD not doing the same. Your MACD is making lower highs, so you've got that bearish divergence. You've got your standard standard sell setup. There's your stop just above the previous swing high, and off it goes. Now remembering that with this type of setup we use a 1, 2, 3, 4, 5 brick or 6 brick trailing stop. Now the other advantage here with this Renko is that, particularly on a market like the New Zealand dollar, it's got a slightly bigger spread, so you've got to be a little bit careful of that. So you're not wanting to scalp obviously on this market, but you can see it actually does a really good job. It even picks up a nice little area of divergence there, bullish divergence there, and you get that nice little run here. The buy sets up here as well. Now don't forget that while you've got the MACD sell, you've also got that trend trader sell, and as I mentioned, sometimes on some of these markets like the Euro Yen, Euro US dollar, you're going to get these price spikes. This is what you call a price spike, where they'll run the market down, spike it up, take out the shorts, then run it down again. Now that's just bad luck. If you're trading this and you're using a trailing stop, you're not going to get this move. The only way you would have got that move would have been to trade off dynamic resistance, like we did with crude a minute ago. We showed you how to do the crude support resistance. So when you do your analysis and look at your markets, and you see markets that have got a bigger spread, just keep an eye on how price is behaving as far as how it looks on the Renko charts, because that's a really good kind of way of looking at it. Because if you compare this chart to the Euro Yen, you'll see the Euro Yen is much smoother. It runs in a much smoother fashion, whereas the New Zealand dollar will run well. It'll give you some good trending moves, but it tends to be a little bit spiky. So the obvious thing that we need to look at is say, right, well, if we've got a system like the trend trader, let's maybe open the stop up a little bit, or at least the trail up a little bit, so we can get some of these good moves. Because you'll see it again. You'll see it does a little bit better job this time. You can see the trend trader triggers here again, runs down, it spikes up a little bit there, not too bad, but it does have these spikes, and then you'll see it kind of turn and then go long, bit of a pullback, and then it comes back again, forms a base here, and then off it goes again. So this is more the price action you're likely to see on the Euro Yen, onwards and upwards, but definitely the New Zealand dollar has a tendency to sometimes kind of give you this type of choppy, kind of impulsive type kind of movement down, so that's going to knock you out of a tight trailing stop. But you can see there's some great movement on this currency pair, and if you are, particularly this one here, like if you're trading, if you're looking to take this trend trade short and you've got that dynamic support resistance, or you use the swing high. The swing high will be another one that will keep you out of these, getting knocked out of these trades. Swing high, swing low, that delivers some really nice profit. Now remember, to turn the swing high, swing low on, you just go into format and you're picking out, instead of, okay, that's the wrong one, I'll load the right one up. Insert the strategy. If you're wanting to go the trend and you want to go, we'll just turn that the Renko counter off and we'll go the trend. Then you would basically just, we want to probably take that down to 30, but we would turn off that to a false, go down to swing trail. Now 3 is going to be too tight, it's giving you 3 bricks, so 5, make it 5, and you want to have it as -5, and we'll make that true, so it'll sit a brick above support resistance, and we'll see how that pops up. And you can see that it just does a really good job of grabbing those bigger moves. So triggers in here and just grabs, just stays nicely outside of the noise. But the kind of disadvantage with that type of thing is that you give up a fair bit of profit. So like we said with when we had Richard in here, Peter Furno a couple of weeks ago, he spoke about having a system that runs on growth and a system that runs on income. Well, with the Forex market, you might decide that the optimal target for you is, say, 80, 100 pips, where you're taking money in regularly and you're building up your cash bank. But where you want to capitalize on these bigger moves, you might decide that, well, I'm not, if I've got multiple contracts I'm trading, I'm going to use one as trying to capture the bigger trend moves, and I'm prepared to give up a little bit of profit because I know that over time, when I'm running these two strategies side by side, that I'm either going to get a shorter target and have a winner, and I've also got a stake in the game for the bigger trending moves. And with these bigger trending moves, sometimes there may not be an opportunity to add to the position. Like on this one here, for example, the market runs down, it doesn't really give you much of a chance to add to the position except for here, whereas on this one you're pretty much back in the game here on the pullback, so that wasn't too bad. And again, back up there. So that was what I wanted to show you on the New Zealand dollar. That's definitely one to mark up on your charts as one to be watching for, because I think that there's some nice clean movement there at the moment. The W trades as well. You've got those nice W trades, and we spoke about this, didn't we, Charles? That's they come up a fair bit in these type of setups where you get that nice double bottom, and you can just add to the trades there. So that's definitely one to look at, because you can see that they come up a fair bit on the charts, and you'll see just a nice W there. So you've got that double bottom. I'll just mark that up. And the beauty about that double bottom is that it just comes off support as well. So when you see these W's set up, I call them the W on the Renko, and they set up on support and resistance, they're just a great little trade. So we've actually got we're just tweaking a strategy that captures those as well, so that'll be another one to add. But let's have a quick look and finish off and looking at beans here. So I'll just open that workspace. Any questions on the Renko? Any questions on the on that particular currency, the New Zealand? The other one to definitely load up and watch for is the Euro Yen. That is absolutely flying along and doing exceptionally well. But I'll just grab this. Let me just grab this beans workspace up. So the beans workspace was sent through from Mark, and just a great. Now I've had a couple of absolute cracking workspaces today from, no surprises, Jim. Well done, Jim. But they're in 9.1, so I'm just going to convert those to 9, and load those up, and they're both on the cycle trader. So for those of you who are wanting to add the cycle trader into your repertoire and build something there, then Jim's come up with a couple of nice DAX and crude cycle trader setups or workspaces. So they're going to be ones that we have a look at probably next week, or I'll do a video and upload those myself. But they're definitely two to be looking for, because there's some great results there on the cycle for the DAX and crude. But I'll just run through this bean. So there's actually going to be probably about 4 new workspaces that you can have a look at. Now I wanted to address another thing tonight too, because I've been doing some work with Mel about loading the charts up, and her and I had a similar problem loading the charts up with limited data. So for example, I would load my chart up and get, say, a performance report here, and it would generate a good performance report. And I'll just load this one up now just to give you an example. So we need to go this one to 9:30 to 10:15, and we just need to change this as well to 9:30 to 10:15, because this is Mark's West Coast time. So we'll change that, and we'll just change the local time to exchange time, and that should work. Now what I was going to say is that if you get a situation where you load a chart up and it's only giving you, say, that there should be 200 or 300 trades there, and it only gives you 10 or 20, and there's definitely an issue with the amount of data it's pulling up. The easiest way to rectify that situation and get the proper amount of data in is to load the chart up for, say, a month, or even for a month initially, and then just start adding a month at a time, and you'll see it start to build the data up on the workspace. So